Alright, welcome back guys. So now we're going to be covering what is known as the flag pattern. Okay, so a flag pattern is nothing but a trend continuation pattern, right? As you can see here, I've drawn multiple ways a flag pattern can look. So we have two types of flags. One is known as a bull flag and the other one is a bear flag. Okay, a bull flag is a bullish trend continuation pattern. So as you can see here, what is happening is price moves up, right, in an impulsive manner. Okay, we're not getting, sideways and then up, sideways and then up. This is a one-sided up move, right, followed by a consolidation, okay, or a sideways movement. So as you can see this, if you can see this pattern, it clearly looks like a flag and a pole pattern. Okay, so first we need is an impulsive move, right, an impulsive up move, then followed by a consolidation or a sideways movement, and then if it breaks that consolidation towards the upside, okay, means it is breaking out of the flag pattern, and that's where we look to take our entry. So if it breaks out of this consolidation area, we will enter on the breakout. Okay, now stop loss, I can keep either the midpoint of the flag, which is usually where I keep it to reduce my risk, or you can keep it on the opposite end of the flag. Okay, and keep one thing in mind, in a bull flag, we will only be looking to take buy trades, okay, because it is a trend continuation pattern. So if price is moving up, that means the trend is up. So we will only look to take a buy trade. Okay, and what is my target? My target is the distance of this flag, this area, right? So I will add this portion towards the upside, and that will be my target, this distance. Okay, and these are the various types of flag formations we can have, right? It won't always look so neat and clean like this. You might have a slanted one, you might have one look like this, or you might have one which looks like this. You might have seen these, in golf arenas where you see flags like this. Okay. Now, just like the bull flag, we also have something known as a bear flag. And this is basically, this occurs in a downtrend when price is trending down or it's bearish, okay, and you get a sideways movement or a sideways consolidation in a downtrend. That is known as a bear flag, right? And we enter the moment the consolidation area breaks. When price starts to move out of the consolidation area is when we enter, right? And very similarly, we keep our stop loss either the midpoint or the opposite end. And my target is simply the distance of the flag, like this. Okay. So now that you've seen these different formations, let's go on the charts and see what does a flag pattern actually look like. So I have Sun Pharma here, the daily time frame. Let's look at a few bear flags, right? Because if you can see from this point till this point, price was in a downtrend. So we can see a nice impulsive move from here till here, followed by a pullback, right? A pullback is also a some form of a consolidation, right? Because price was trending down nicely, and then all of a sudden the trend starts to lose its steam. Okay, now as it starts to pull back, see where it breaks, right? It breaks out on this candle. It breaks the consolidation or the pullback on this candle. So we will take our entry on the breakout. Stop loss can be midpoint right here. Okay, now target in this case right? Target in this case can simply be the low of the flag. Means where the flag starts to pull back from, we can keep that as our target. Okay. Now another way to decide the target for this, okay, if you want to make it a bit more complicated, right, we can calculate the distance from this end, this lower end, to this top of the flag here. We can calculate that distance and add it to the entry here, which can become my target, or you simply keep it as the low of the pullback, where the pullback starts from. Okay, essentially if you go to see, this entire area is the pole, right, and this portion is the flag. So your target can be the bottom of this pole. Okay, let's look at another example. We can see this nice impulsive move here, right, from here to here, and we get a pullback or consolidation. Okay, and then eventually what happens? It breaks out of that range and starts to move lower, right? So what is happening here is downtrend, consolidation, right, and trend continuation. So stop loss can go right here on the opposite end, and targets, you can either keep the low of the pole, or as I said, you can calculate that distance and add it to the entry. This can also be considered as a flag, right? This would be that triangle looking flag as we drew here. Okay, let's look at some bullish examples. So I can open the chart of Bajaj Finance. So I can see one very large, very big flag here. Okay, see this nice impulsive move, right? One-sided move up. Then we start to get this pullback. Okay, after this nice up move, price just starts to move in this range, in this pullback. And now eventually what happens is it breaks out. This is my stop loss midpoint. Okay, and target we can keep this high here, the pole high. Okay, here is another flag formation. So nice impulsive up move, right? You can see these green candles just moving up and up and up, followed by a sideways movement, a consolidation, right? So we have a nice, very uniform flag pattern, and then finally breaks out and easily achieves the target. Okay, we get another one here, right? Nice impulsive move, sideways movement, consolidation, breakout, and easily achieves the target. We get another nice flag pattern here, nice impulsive up move, followed by consolidation, enter on the breakout, and easily achieve our target somewhere up here. let's look at the chart of Nifty. Okay, and we can also see this on higher time frames. That was on the monthly time frame. Now let's look at this on the that was on the daily time frame. Let's look at it on the monthly time frame. So nice impulsive up move, followed by a pullback consolidation. Okay, and that is my entry, and the targets are easily achieved. Here's another one. Nice impulsive move, one-sided move, followed by a pullback and breakout, and target easily achieved. And we can see the same in Bank Nifty as well, right? We can see one flag here, one flag here, another one here, another one here. Okay, so flag patterns are best to be traded when the market is in a trending condition, right? If you see a stock which is consistently trending, okay, that is when you will see the most flag patterns, because flag patterns are what? They're nothing but trend continuation patterns. Means if you see a nice up move in a price and you see a pullback, most likely it will tend to continue its trend, right? Hence forming a flag pattern like this. So look for these in trending stocks. Okay. So this was the flag pattern. Okay, it's very simple, very easy to trade. So let's move on to the next pattern now, guys.